A quant fund just spotted something that only happens once every few years in Bitcoin. And when this signal last appeared, Bitcoin exploded over 300% in less than 12 months. Here's what everyone is missing right now. While most traders are panicking about Bitcoin losing support levels, institutional quant funds are quietly watching on-chain data that tells a completely different story. These aren't YouTubers with opinions. These are algorithms analyzing billions of dollars in blockchain transactions, looking for patterns that predict major price movements. And right now, multiple rare signals are aligning at the same time. Signals that have only converged 3 times in Bitcoin's history. And each time, Bitcoin was sitting at a major bottom before a massive bull run. So what are these signals? Let's break it down in plain English. First, something called the spent output profit ratio, or SOPR, just hit a critical level. Don't worry about the technical name. Here's what it actually means. SOPR tracks whether people are selling Bitcoin at a profit or a loss. When this number drops below 1.0, it means most sellers are taking losses. They're panic selling. History shows us that when weak hands panic sell and this ratio bottoms out, smart money starts buying. We're at that exact point right now. Second signal, long-term holder supply just spiked to levels we haven't seen since early 2023. Translation? People who've held Bitcoin for months or years are refusing to sell, even during this crash. They're accumulating, not distributing. This is classic bottom behavior. Third signal, and this one's wild. Exchange reserves are dropping fast. That means Bitcoin is leaving exchanges and moving into cold storage wallets. When supply leaves exchanges, there's less Bitcoin available to sell. Basic economics. Less supply plus steady demand equals higher prices eventually. Now here's where this connects to something way bigger than just Bitcoin. Let's talk about ISO 20022. ISO 20022 is the new global standard for financial messaging. Think of it as the language banks will use to talk to each other in the new digital economy. Right now, banks use an old system called SWIFT that's slow, expensive, and can't handle modern digital assets. ISO 20022 changes everything. It allows banks to send money instantly across borders with full transparency. And here's the key part. Certain cryptocurrencies are built specifically to work with this new system. Quant, ticker symbol QNT, is one of the major ISO 20022 tokens. Quant created something called Overledger. It's basically a bridge that lets different blockchains and traditional banking systems communicate with each other. Banks adopting ISO 20022 will need this kind of technology. Why does this matter to you? Because when Bitcoin hits these major inflection points, altcoins with real utility tend to explode even harder. If Bitcoin goes on a 300% run like it did after the last signal, tokens like QNT that solve actual banking problems could see even bigger gains. Other ISO 20022 tokens include XRP, XLM, YLGO, and HBAR. These aren't meme coins. These are projects working directly with governments and financial institutions to build the next generation of money movement. So what should you watch next? Pay attention to Bitcoin's price action around the $60,000 level. If these on-chain signals are correct, we should see strong buying pressure every time Bitcoin dips below that zone. That's your confirmation that institutions are accumulating. Also watch for news about banks adopting ISO 20022 standards. The European Union is already moving forward with implementation. When major US banks announce adoption, that's when these tokens could really take off. And if you're looking to position yourself in these markets, you can start trading tokens like QNT and other ISO 20022 projects on platforms like Bitunics. Links in the description if you want to check it out. One more thing to watch. Institutional money flow. If quant funds are seeing these signals, you can bet larger institutions are too. Watch for increased options activity and futures positioning. That'll tell you if big money is actually backing up these signals with real capital. Bottom line, we might be sitting at one of those rare moments where on-chain data, institutional signals, and macro trends are all pointing in the same direction. The question is whether you're paying attention while everyone else is panicking. This is educational content only, not financial advice. Always do your own research before investing in any cryptocurrency. Follow Stack Daily 60 for daily crypto and money tips.